For the rest of this year, we think Bitcoin ETFs will set a record for flows in Q4 and that total 2025 flows will be above 2024 flows. They haven't been on pace for that until October, but we've seen flows significantly accelerate. And I think we'll end up with 35 or $40 billion. My bigger, hotter take on Bitcoin ETFs is I think eventually that will be $1 trillion market. So right now it's about 200 billion. I think we're going to wake up in a couple years and there'll be $1 trillion in Bitcoin ETFs. Part of that is that I think the price of Bitcoin will go up. And then part of it is institutions still by and large don't own that much, right? It's still 75% owned by retail. I think it'll be 75% owned by institutional. So inflows, price appreciation, we'll have $1 trillion in Bitcoin ETFs within a few years. And I think that'll be exciting.
Matt Hougan is sounding the alarm on a historic shift. Bitcoin's ETF boom is only just beginning, and institutional money is preparing to rewrite the rules of the market. Bitcoin's momentum is accelerating as institutional capital floods into exchange-traded funds at record speed. According to Matt Hougan, Bitcoin ETFs are on track to set a new inflow record in Q4, with total 2025 investments projected to reach an unprecedented $35 to $40 billion. This surge could ultimately propel the Bitcoin ETF market toward a $1 trillion milestone, signaling a dramatic shift from 75% retail ownership to 75% institutional participation. Driving this wave are powerful catalysts: a more aggressive rate cut outlook from Federal Reserve, sovereign wealth fund allocations, and expanded access through platforms like Morgan Stanley and Wells Fargo. Beyond Bitcoin itself, Hougan notes institutional investors are turning their attention to stablecoins and tokenization opportunities on networks such as Ethereum and Solana, viewing them as core components of future portfolio strategies. The passing of regulatory measures like the Clarity Act is expected to unlock even greater inflows as traditional finance begins indexing crypto alongside stocks and bonds. With more than $1 trillion flowing into U.S. ETFs this year, led by bond, gold, and crypto funds, Bitcoin stands at the center of a structural transformation in global capital markets. The digital asset is no longer just a hedge, it's fast becoming a core institutional asset class. Bitcoin's next chapter is being written by institutions. Don't just watch history unfold, be part of the conversation. Share your thoughts in the comments, hit subscribe, and spread the word to stay ahead of the wave.
I think we're on that track. It would help if we got a little bit more aggressive on the rate cut outlook, if it looked like the Fed was going to be more radical about letting the economy run hot while cutting rates. I think we could get that sort of signaling. It would help if we see more sovereign wealth funds allocate. But I think that debasement trade and the unlock of platforms like Morgan Stanley and Wells Fargo to buy Bitcoin and how that correlates to flows, I think that alone might be enough. But I do think if we start to see the Stephen Moran force driving down expectations for interest rates, I think that would be an extra catalyst, a cherry on top. There's a relentless bid for investment into everything related to stablecoins and tokenization. Mm-hmm. Ryan and I have both been on the road recently. I've been in Chicago and New York this week. Next week, I'll be in London and Barcelona. Every TradFi investor that's looking at crypto, as interested as they are in Bitcoin, what they really want is a way to hop on the stablecoin and tokenization train. The primary ways they're doing that, there are three. One is ETH, the other is Solana, and the third is crypto equities. We're seeing a lot of inflows into our crypto equity ETP, but that train is leaving the station. I think the question there is whether the Clarity Act goes awry and doesn't make passage through Congress. If we do see sort of momentum on the Clarity Act reappear and rising expectations that it will get through Congress, I think that trade's going to absolutely explode, and we'll see much higher ETH and Solana prices and huge inflows into those ETPs. So that's the other big story in crypto, and it's just relentless and overwhelming from the TradFi side. Yeah, so we've been running this fund as a private fund and then a sort of GBTC style trust for almost 8 years. It's the top 10 weighted by market cap, screening out things like meme coins and some controversial from a regulatory perspective coins like BNB. So it's a lot of Bitcoin, a lot of ETH, a lot of Solana, a lot of XRP, a lot of Chainlink. And we think there's going to be huge demand for that. You know, for a crypto native investor, that seems like a very boring investment because we all have our own fiefdoms and turfs. We're Solana or we're ETH. We like to fight about these things, but for a traditional investor, they index everything. They index stocks, they index bonds, they index real estate. Guess what? They're going to index crypto. So I do think that will get significant flows that will lift all assets if and when the US government reopens and then the SEC sees fit to allow our ETF to list. So we're really hopeful for that. Also, just think about how sad you will be if stablecoins dominate global payments and every stock and bond is tokenized and you called it before 99.9% of the world, and then you bet on the wrong horse and ended up with nothing. It would just be a psychologically crushing position to do. Look, the scale of the market that stablecoins and tokenization is going after is so massive that even if you bought like the top 10 potential winners and only one of them won, which is not what I think there'll be multiple winners, but even in that scenario, you're going to do extraordinarily well. So I agree, we can all have our favorite child, but many people would do well to bet across them. I just think the risk of picking the wrong horse in this race is too large given the size of the prize at the end of the race. I tell my ETH friends that I also am very optimistic on ETH. I think it's well positioned. It's the leader in stablecoin and tokenization AUM. But in 8 years of operating full-time in crypto, I've never quite seen a setup like the setup for Solana. The three things that I think are going to lift it substantially higher are you have this massive unrelenting interest in stablecoins and tokenization, and Solana has one of the best and most interesting solutions there. You have the rise of Solana digital asset treasuries with charismatic and well-spoken leaders like Kyle Samani, who will be on CNBC talking about Solana ad infinitum. And then you have the expectation that we're going to see a lot of ETFs launch. When we've had these things line up before, you had Bitcoin ETFs, Bitcoin DATs, and rising interest in fiat hedges, and the price tripled. You had Ethereum ETFs, Ethereum DATs, and rising interest in stable coins, and we're from 1,500 to 4,000 plus. And then you think about the fact that Solana is a tiny asset. It's 1/5 the size of ETH. It's 1/25 the size of Bitcoin. Just a little bit of flows into it because of those things I called out. There could be a real supply demand crunch there. And I think the price could double or triple in relatively short order as institutions make their first allocations into this space. Again, I've never seen a setup quite look like this.
Matt Hougan is sounding a clear warning and a bold prediction. Regulatory risks may be rising, but Bitcoin's institutional wave is only just getting started. Matt Hougan notes that the odds of passing the Clarity Act this year have fallen sharply, shifting from a confident 90% to a more uncertain 50 to 55%. He cites the ongoing government shutdown and deep partisan divisions in the Senate as key risks. The Democratic counterproposal, described by Hougan as aggressively anti-crypto, has created a political standoff that may delay meaningful progress into next year. This regulatory uncertainty, he warns, could weigh on broader crypto sentiment, though Bitcoin and Ethereum remain better positioned to withstand potential headwinds. On the ETF front, Hougan explains that exchange-traded products don't generate demand themselves, they amplify existing flows. Assets with strong narratives, like Solana, are poised to benefit most as capital accelerates into crypto markets. Bitwise Asset Management expects Bitcoin ETF inflows in Q4 to surpass the $36 billion record set in the first year, reflecting the growing institutional wave. Major wealth managers, including Morgan Stanley and Wells Fargo, have opened access to crypto allocations, unlocking fresh demand. With Bitcoin trading above $125,000 and the debasement trade gaining traction, Hougan projects ETF inflows could push the Bitcoin market toward a $1 trillion milestone, signaling a structural shift in global finance. Let's get back to the interview.
The risk is I was 90% confident we were going to get it, and now I may be flirting with below 50 or around 50. The two reasons for that, you mentioned one, which is the government shutdown. They literally can't work on this because the doors are closed because the government's incompetent. And the second reason is we've seen the Democratic counterproposal in the Senate to the Republican bill in the Senate. And the Senate is where all the action is right now on the Clarity Act. And the Democratic proposal is a non-starter. It's aggressively anti-crypto. It feels like it was penned almost by Elizabeth Warren. And so there's not an easy path to reconcile the Republican version with the Democratic version. They're on two very opposite sides, and it looks a bit like the Democrats want to make this a difficult political issue. If it doesn't happen this year and we bleed into next year, it probably gets even harder. The way it's resolved, I think, is you're going to need lobbying pressure from crypto and lobbying pressure from the traditional finance industry to encourage those Democrats to move along. I'm probably still at like a 55% chance it gets through, but I do think it's a real risk to the market. If we see the Democrats digging their heels with their current approach, you could see expectations sour for this, and that would be bad for everything except for maybe Bitcoin and Ethereum. Everything beyond that, I think, would suffer from a regulatory perspective. I think the right way to think about ETPs is not that they bring flows, it's that they amplify flows. So in retrospect, looking back at the Ethereum launch, why did they not bring flows into ETH? Well, literally no one wanted to buy ETH between July and whatever, maybe for about a year, right? For the first year that they were in the market, until maybe April 15th or May 1st of this year. That's when ETH got its momentum back. We had reorgs at Treasury, we had new technical advances, and we had the stablecoin trade. So what that tells you is they don't bring flows on their own. You can't launch a Bitcoin Cash ETF and suddenly we're all talking about eCash again, right? That's not going to happen. But if a asset has a good story and a good reason for flows, then the ETFs are like a super highway that let traditional investors pile in alongside retail investors. So I think it's going to be pick and choose them, right? Do I think Solana will get flows? I absolutely think Solana will get flows. Do I think Chainlink will get flows? I think Ryan is right, but early. I think the narrative will roll onto Chainlink after people digest Ethereum and Solana. Would Hype get flows? I think Hype would get flows. Will Litecoin ETPs get flows? Boy, I would be surprised. So think of them as a flow amplifier and not a way of inciting flows. That's the right way to think of these ETPs. So there'll be winners and losers. But it's good to have them because it does make the flows flow faster when people are excited about that. One thing that occurred to me, which maybe should influence his Bitwise product strategy, that's why I do these calls with Ryan, is the way they can incentivize flows if they make it easier. So as an example, right now, everyone wants to invest in stablecoins and tokenization. It's a hop to get to Ethereum and Solana, which TradFi will pronounce Solana or whatever. But if you have a stablecoin and tokenization ETP, or you have a thematic ETP, then it becomes easy. I want to invest in stablecoins. I Google stablecoin in Charles Schwab and up peps this. I do think that can incentivize flows. So maybe the index thematic strategies will drive flows in a way that the individual crypto assets will not. One more thing about ETF flows, which maybe people in crypto don't understand. It doesn't matter how many people dislike an asset. So if you take the median opinion of XRP in the crypto community, it's probably negative. That does not matter for flows. The only thing that matters is, are there people that really like the asset? Because the people who dislike it just don't buy it. But if there are people who like it, that's better than having a sort of meh reaction, like an asset that everyone's like, oh, the umpteenth layer one, meh. I'd rather have people who love an asset and hate an asset. That's actually good for flows. So XRP is an example where, of course, there'll be flows because there is the XRP 10,000 people and they're all going to want to buy. That may be, I think, misunderstood by the market a little. For the rest of this year, we think Bitcoin ETFs will set a record for flows in Q4 and that total 2025 flows will be above 2024 flows. They haven't been on pace for that until October, but we've seen flows significantly accelerate. And I think we'll end up with 35 or $40 billion. My bigger, hotter take on Bitcoin ETFs is I think eventually that'll be $1 trillion market. So right now it's about 200 billion. I think we're going to wake up in a couple years and there'll be $1 trillion in Bitcoin ETFs. Part of that is that I think the price of Bitcoin will go up. And then part of it is institutions still by and large don't own that much, right? It's still 75% owned by retail. I think it'll be 75% owned by institutionals. So inflows, price appreciation, we'll have $1 trillion in Bitcoin ETFs within a few years. And I think that'll be exciting.
Bitcoin stands at the center of a financial transformation unlike anything seen before. Institutional capital continues to flow in at record speed, ETF inflows are breaking new ground, and major financial platforms are opening the floodgates for broader participation. With prices holding above $125,000, the market is being powered by genuine demand rather than short-term speculation. Even during periods of correction, accumulation has outpaced selling, reflecting strong conviction among investors. The growing dominance of institutional ownership, coupled with the rise of stablecoins and tokenization, signals a deeper integration of digital assets into the global financial system. What was once a fringe alternative is rapidly becoming a cornerstone of modern portfolio strategies and long-term capital allocation. Could Bitcoin's institutional surge and record-breaking ETF inflows mark the beginning of a long-term financial shift, rather than just another bull run? The next chapter of Bitcoin's story is being written right now. Don't just watch it happen. Share your thoughts in the comments, hit subscribe, and spread the word to stay ahead of the wave.